Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And today, a quick video about what to expect at the next Fed meeting, which I believe it's the 19th and 20th or 20th, but it's mid to late June. And certainly the reasons to suspect, I guess I'll say that I would expect either they will cut rates or they will begin signaling in the way that the Fed does that they are getting close to cutting rates. As you can see here, this one's from May 30th. Fed would consider interest rate cuts if growth outlook darkens. Federal Reserve Vice Chairman Richard Clarida said the U.S. economy is in good shape as long as interest rates are low, but that central bank officials would consider interest rate cuts should economic data reveal material risk of a sharper slowdown than they currently expect. Of course, what is happening at the exact same time they're saying this? You have an escalating trade war with China, who released a white paper on Sunday indicating primarily that they're not thrilled with the U.S. and also that they don't plan to back down. And then amazingly, in the last couple of days now, somehow we have the U.S., I like to distinguish against the U.S. government, not part of that club. But the U.S. government now starting a new trade war apparently against Mexico and now India, which is shocking. So, you know, here he says we're attuned to potential risks, and if we saw a downside risk, that would be a factor. Of course, the stock market getting pummeled as well. I've continued to wonder, I mean, to the degree that every time you say we're rationing up trade wars, the stock market gets hammered down. Coming right after Trump said he wanted 1% interest rate cuts by the Fed, which I think may well happen a lot sooner than most folks think. I would say if we don't get a cut at the June meeting, I'd certainly be watching out over the summer or by September. And again here, all of this has unfolded at the same time. Fed officials have been surprised by a weakness in inflation that has defied forecasts of a sustained return to 2% goal. All right, I can't resist. A quick note on that, because here's a day later, U.S. inflation shows signs of life. Again, this idea that, you know, inflation is somehow a good thing. We have a video here. I don't have the sound on, but it's showing a movie ticket in the 70s was 73 cents. Now it's $9 today. So I would say that we actually have plenty of inflation, yet somehow Fed is concerned that we don't have enough. And what have we seen over the past decade and longer, that once the stock market starts getting pounded, you know, it's really set up so everyone can look to the Fed to lower interest rates. Also, it was interesting in the last Fed minutes, they had something called a monetary extension program, the MEP. I'd say watch out for that one going forward as well, because sure seems like the way that they telegraph, you know, some of these programs and sounded a lot like quantitative easing to me. You can dig up the Fed minutes from the May 1st meeting if you'd like to see further, or you can check my YouTube channel where there's a video a couple days ago on that. So got you covered. And of course, just in case there was any doubt, again, over the weekend, more trade war news. And here's Fed Bullard says a rate cut may be warranted soon. Given the risk to economic growth posed by global trade tensions, as well as weak U.S. inflation, Bullard said Monday, the first Fed official to say recent events may require a central bank response. I mean, a few of them have been hinting at it, but again, the Fed faces an economy that is expected to grow more slowly going forward, with some risk that the slowdown could be sharper than expected. Although perhaps most importantly, if we can find it here, is the key that you have a massively inverted yield curve there, the 7-year 195, 10-year 207 versus the 1-month 236. And if you look at really like a 10-year as the combination of, if you back the math out, you knew the interest rate for each year and you knew what that was going forward. You can back out the numbers. So basically, the bond market is pricing in that, interest rates are going to be cut soon. Not saying I would go so far to say this, but maybe we'll raise a warning flag. Certainly could be an indication that the bond market is getting away from the Fed. Again, it's a little early to say that, so I want to be clear about that. But certainly if we are at the point where something like that happens, this is one of the signs that you would see. Again, if you dig into the IOER rate, which Dave Kranzler of Investment Research Dynamics has been doing some good reports on, another sign that, just tightness in the banking system. So, I mean, they're telling you it's coming. In the end, does it matter whether it's June or sometime later in the summer? I would say not, but certainly, again, you're seeing same thing everyone in the precious metals Austrian economics community has talked about for the past decade, that they're going to print money. When they try and take away the printed money, you're going to run into trouble here. I mean, when they already stopped the interest rate cuts last year, plan to stop the quantitative easing September of this year. Would not be surprised if that gets moved up sooner as well. So while I can only make educated guesses at the timeline, I imagine we'll see the market sink over the next 2 weeks leading into that meeting and start hearing more talk about stuff like what Bullard here says. So should be fascinating. And again, certainly assets like gold and silver. We've had a bit of a rally in gold and silver over the past couple days. Again, it's always a little tricky with so much paper shorting the market, yet based on some of the latest positioning reports, I would think in silver we'll be back over $15 soon. Seems to me it's a high probability of at least $1 or $2 rally. Whether we reach the break point that so many, including myself, have waited for, only time will tell. But anyway, just some things to keep an eye on heading into the June Fed meeting. Hit that subscribe button, and I will keep you posted. Thanks.